example of scaling in to a position with a micro E-mini futures contract. Now, the markets have been pretty volatile lately, and any given 5-minute bar has been pretty big, right, from high to low. And one way to kind of enter the market with a little bit less risk is to do a micro. A micro E-mini is 1/10 the size of a classic E-mini. And that means it's $1.25 a tick and $5 a point instead of $12.50 a tick and $50 a point. It's 1/10 the size. So what I mean by scaling in is let's go ahead and enter the market on a buy limit order. I want to go ahead and hit the buy button on the upper right. I'm going to drag down my mouse to, let's just say, 2400. 2400 even, and I'll put that limit order out there. Okay, so that's order number one. And the second thing I'm going to do is I'm going to place a second order. And let's place this order a little bit lower. Let's say at 2394. Let's go ahead and hit buy. So now I have two orders working to buy on a limit in the marketplace. And one of them is at 24 even, and one of them is at 2394. So if they were both filled, then I would be long two, right? I'd have bought two contracts. And I would buy them, though, at an average price in 2400 plus 2394 divided by 2 is going to go ahead and equal 2397. So my average price would be 2397. And this way I may be able to capture some additional ground on some of these bigger candles. I'm going to go ahead and let this video go. I'm going to pause it. I'll resume once we get to our levels. All right, it looks like we're getting close here to possibly getting filled. Let's see what happens in the next couple of seconds. We'll have a little ding, and there we go. So now we've bought our first position. Our first position is bought at a price of 24 even. And now we're waiting and waiting and waiting. Now, the other thing that we're going to do at this point is we're going to put a stop loss in here. And we should have done this earlier, but I'll do it right now. And since we're long one, it's going to be a sell stop. And I'm going to bring it down below, so an area below the market. We'll just put it down here at 82 just for demonstration purposes. And we're going to change it to a two contracts. And I'll go ahead and hit that sell button. And now I have a red stop loss order at the market for two contracts. Well, why two? Well, if the market moves down here and we get filled on our second target at 2394, then we'll be +2, and we'll need to have a two contract stop. Alternatively, right now, we could certainly attempt to try to take profit at a higher price, and we would do that by just going ahead and putting a limit order to sell up higher. And let's go ahead and put that at, I don't know, we'll put it at, let's say 24.15. But it's only going to be for one contract because we only have one right now. And there we go. So now we have a contract in to sell one at 24.15. And if you forget, there's this little order box here on the right side. Move everything closer together. That shows you your prices of your open orders. Okay? That's how that works. If you want to see what trades you've made for the day, there's a little closed book icon in the middle of the positions bar. If you click on that, it will show you ... green dot, where you bought a contract at or where you sold a contract at. In this case, we bought one at 2400, and that's where we're long from. So we'll go ahead and kind of watch the market percolate here for a second, and I'll probably edit some of this wait time out of the video so we can see what the result of this trade is, because at this point there will be a result of the trade. All right, just checking back in. It's been about 60 seconds or so, and we're approaching our target for our one contract long position at 24.15. We're bouncing away from it. Looks like we're getting close, 24.14. there we go. We got filled on our contract, and it resulted in a flat position. Don't forget, we need to cancel these two orders. The trade's been completed. So we're going to go over here to cancel MES, MO orders, and all of those working orders are canceled. We bought a contract at 2,400. We sold one up here at 24.15 and a half. And that was for 15 and a half handles. And the P&L on that, remember, it's $1.25 per tick, or $5 per point. And the total is $78 minus your commissions and fees. So that's how that works. And again, this isn't a simulator. This is a real-time practice account. But this is one possible way to maybe protect yourself against the bigger swings, yet be able to participate by scaling into an average price in the market. Hope that helps.